Welcome everyone to Real Estate with Gwen Price, and today I'm very happy to have with me Ryan Miner, and Ryan is a tax specialist.
Yeah,
Can I
yeah.
say that?
Been doing it 20 years.
Chartered
It's fair
accountant.
to say.
Yeah. And which firm are you with?
I'm affiliated with KPMG.
Okay, great. Well, there's always interesting things happening with tax world, and one of the ones that comes up with me lately, people are wondering about capital gains with their own personal residence. Is capital gains ever applicable when it's your own principal residence? Have they changed any rules about that?
Well, I mean, generally, when you own and occupy your own home, generally the sale of the home is tax exempt. It's called a principal residence exemption. I mean, for most people, it isn't a problem. There are, Budget 2022 is an interesting one because quite a bit of it deals with real estate and the unaffordability of real estate, and we're going to talk a little bit later on, time permitting, if just about some of the tax credits, just to make life a little more affordable, plus the new savings plan. But there is a rule applicable to so-called property flippers that came out in Budget 2022. Yeah. The rules aren't written yet. They're in the budget talked about them more conceptually, and then the government said, well, we're going to consult Canadians and then issue some draft rules, and then later on pass them. I mean, property flippers have been kind of on the radar for a long time. Yeah. CRA's had numerous sort of audit programs trying to essentially what they want to do is that when they want to tax property flippers as if they're carrying on a business. So if you buy a property and you live in it a short amount of time, and while you're there you improve the property and then you sell it and you have kind of a history of doing it, the government feels that is not that should not be a case where you can get the principal residence exemption. That should be a case where you're taxed on your profit as if you were carrying on a business. They consider that a business, basically. So the new rules basically say that if you buy and sell a property all within 12 months, there's a presumption that it's business income. And then what you have to do is you have to be able to argue that you fall within a certain one or more categories of exception. And basically the categories boil down to life changes. Right. So if there's some bona fide reason why you had to sell in that short amount of time, for example, death,
divorce,
disability, divorce, new job, birth of a child. These are some of the examples they give.
Yeah, that makes sense.
If you could fall into one of those categories, then this rule wouldn't apply. Mm. So bottom line is they want to kind of put the onus on you to justify that this isn't on account of business. So they create this rule that says, okay, you're deemed to have a business profit in this instance. However, if you fall in one of these categories, the rule wouldn't apply, and you could possibly get your principal residence exemption. I say possibly because, as you can imagine, there's a big laundry list of rules. You also around the principal residence exemption and who can claim it and whatnot. So
and if they do deem that it is a business, you're flipping, making money.
Yeah.
Is it 50% of the profit? Is it taxed that way, or how do they?
Well, what happens is, you calculate your profits, so you would take your selling price minus all your expenses associated with improving the property and the initial purchase price itself. Mm-hmm. And that would be your profit from the flip, and that would get added to your income like any other kind of income, employment income, right. Carrying on a real estate agent business. We have a system where we add all our income together, and then that determines your tax. So it would just get tacked on all your other income and taxed accordingly. So if at the end of the day you have $50,000 of profit, then that would get added to your other income, and you would pay tax based on the applicable tax rates depending on your other income. Mm-hmm. So it can be quite high. It's not a capital gain, which is 50%. 50% of which is taxable. This is ordinary income that will be taxed at full rates. Okay. Which is one of the reasons why the government wants to move on this area a little more. They've been
Well, there was a lot of people doing that, buying and
Yeah.
selling within a short period of time, so I can see where they are
and
targeting that.
the CRA has been
yeah.
somewhat unsuccessful in a lot of cases. There are many court cases on this issue, and quite a few of them they've been unsuccessful. So they want to kind of. I mean, I don't think this is a new policy. They just want to kind of make
It's always
it.
kind of been on the radar of the
Yeah.
government, watching that sort of thing. But I think a lot of people have, I've heard people say, oh, it's 6 months, and they don't know what time period you're talking about, right?
There is no rule that says, okay, well, if you own it 6 months, you're okay, versus 8 versus 10. Really, it's what we call a question of fact. It's all the facts and circumstances around it. One of the factors is, well, why did you buy the property? Did you buy the property to improve it and sell at a profit, or did you buy it to live in it? So, I mean, these are all the factors that sort of get weighed in the determination. So there's no set period of time where it would be principal residence exemption eligible, or capital gain, or business income. So it all comes down to all the circumstances.
Yeah, I've seen a number of numbered companies also buying and selling real estate, so they're already registered as a corporation.
Yeah.
And that's a different thing than just somebody, an individual who's doing this.
Well, the company can't claim a principal residence exemption. So when the company later on sells it, the question is it a business of buying and selling property, in which case the gain would be on account of business income, or was the property bought to earn income, like buying a rental property, for example?
Okay.
Did you buy the tree for the fruit, or did you buy the tree to sell the tree?
Yeah.
So I mean it's an important difference for tax, because capital gains are only taxed at 50% of
Okay,
we only tax half the gain. So
Yeah.
I mean, generally speaking, you would prefer a gain because of the favorable tax treatment, but
Yeah.
companies can't claim the principal residence exemption. So if you're using companies, then it's either business income or capital gain.
What other things came up in the budget? Like there's tax credits now?
Yeah.
Is there a difference in a savings account? Or
Oh, yeah.
there's all different kinds of things out there.
Well, if you look at budget 2022, quite a bit of it is devoted to housing, given that housing is so unaffordable now, and it seems to be getting worse. The government, bottom line is they basically want to make it a bit easier to get in the game, especially for younger folks that they need kind of a shot in the arm to generate the amount of savings you need for a down payment.
Yeah.
The government also recognizes aging population. Increasingly people are creating so-called granny flats, so that you might have a parent live with you, or a child, an adult child perhaps with a disability, for example. Two fairly common situations. So the government came out with a credit called the Multigeneration Home Reno Credit.
Okay.
So what it is you're allowed to renovate a home to create a secondary sort of residence in there.
Okay.
That would be a secondary suite for a senior or an adult with a disability. This would be effective 2023. The credit would be refundable, and you're allowed to claim 15% of eligible renovation costs up to $50,000.
Okay.
So I mean that's one of them.
Because that is as a realtor, people ask me all the time for, in-law suites, or what they're talking about is like a secondary unit for either different generations, for sure, living together to try to make things easier on everybody.
Yeah, so $7,500 in real money, real tax savings.
Okay.
And it's refundable, so if you don't have enough tax to pay, they'll actually pay you the difference. So,
Okay.
I mean, that's something that increasing, the government's recognizing that these situations are becoming more common, and to help out with housing, this is one of the programs they created. Another one is, and this program, it already exists. It's called the Home Accessibility Tax Credit. However, they've doubled the amount. So the Home Accessibility Tax Credit basically is a tax credit for where you renovate a home to make the home safer or accessible for a person that is either age 65 and up or qualifies for the disability tax credit. So you need one of those. You need a person at 65 or up or qualifies for the disability credit. The credit can be claimed by that person, or a so-called eligible individual, which could be a parent or a child.
Okay, yeah.
This credit already exists. So what they've done is they've doubled it. The credit, you were given a credit for up to $10,000 of expenses to, again, make a dwelling safer or more accessible. Now they've upped it to $20,000. The amount of expenses is up to $20,000. So that would mean a credit of up to $3,000 in terms of real savings. So that's the home accessibility credit. For first-time home buyers, right now at the moment there is a first-time home buyer credit. There also is a first-time home buyer exemption under the land transfer tax rules, but that's a different issue.
Yeah.
So the first-time home buyer credit is if you meet the definition of first-time home buyer, then you can claim, presently you claim a tax credit of $5,000. When you buy a first home, and I believe it can be split if there's spouses.
Okay.
So you get 15% of that, 15% being the lowest tax bracket, times the amount of the credit. So Budget 2022 doubled that credit, so you can claim a flat amount of $10,000, and the real savings are 15% of that, so $1,500. And it would be effective for homes purchased on or after January 1st, 2022. So it's already in effect.
This year, yeah.
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 And another. Now the last topic is a savings plan that was created called the tax-free first home savings account.
Yeah.
So basically, the rules, the detailed rules aren't out yet. At this point, it's more conceptual. The government's going to have to go back and come up with the detailed rules of how to implement this. However, basically, it allows you to contribute up to $8,000 per year to one of these accounts, and the purpose of the account is to save up to buy a home.
Okay.
And you get a tax deduction for it. So you contribute up to $8,000. It's a deduction from your your tax return, and you save tax at whatever rate you're at that point, right? So one of the problems with it is it benefits higher income people more than lower income people. It's just by design.
Yeah.
And you're allowed to contribute up to $40,000 total.
Okay.
And then you can withdraw tax-free in order to purchase a home. So I mean, at this point, it's they're going to come up with detailed rules. It's a more conceptual at this point, but that's where they're going.
Okay. So there is you can't go right now and open an account like that, or can you open a tax-free savings account and transfer it into that?
Well, those are some of the details that have to be fleshed out. I mean,
Okay.
that plus the interaction with RSPs.
Right, yeah.
Can you contribute if you're age 71, for example? All these sorts of things, and what happens on death or divorce. All these sort of detailed things have to be ironed out.
Any timeline they got yet? Or?
Well, it says here, quote, could be opened and contributed to in 2023. So,
okay. We're getting closer.
Well, yeah, they're going to come up with some rules, and then there's going to be a comment period. It's the way it usually happens, and then once it gets passed, there'll be a period of time where they have to work with the banks to figure out how the banks are going to tell them who contributed what, so they can monitor if you over-contributed.
Right. Yeah.
Like a TFHSA or an RSP, there would be a penalty tax if you over-contribute. All those sort of things. Excuse me. Have to be fleshed out, but I mean, it's something. It allows you to deploy the earnings that are generated in the plan. So you're going to be investing the money in eligible investments, which is another thing that has to be ironed out. What can you invest in?
Oh, okay.
And then you also get a tax deduction, so you're going to have some tax savings that you can deploy into your home purchase. So. Still, a little bit preliminary, but still to be worked out. But it's something. It's giving people more money to come up with that down payment.
Yeah, which is hard, right? I mean, the banks always want to know where's that down payment coming from. It didn't instantly appear in your account. How long has it been there? Where did it come from, right? Because of money laundering and all of those things, they're concerned about large sums of money all of a sudden appearing.
I forgot to mention too. You get the tax deduction going in, and while the money's in the plan, it's not taxed, but you don't pay tax when it comes out.
Yeah.
So
Okay.
it is beneficial in that regard.
Yeah.
So that's the tax-free first home savings plan. You'll probably hear about it in the newspaper.
So in addition to that tax-free home savings account, is there anything else they're coming up with, or are those the bulk of the credits and things that people have to access?
In the budget, there's quite a few pages devoted to building green.
Okay.
I at this point, I don't know all those programs, but if you're curious about green building and what's out there, I would consult Budget 2022 and see what it says.
How many pages is that?
Well,
That's why we need someone like you.
250 pages, but it's not only real estate.
Yeah, I mean, it's just gotten so complicated, hasn't it, over time, the tax code and
There was a
everything.
time when the tax code was to raise tax,
Yeah.
and now it's like raising tax plus all these other social sort of goals.
Yeah, I don't pretend to know, enough. I know a little bit, but nothing. I know my clients ask me all the time, and I say, okay, you need, in your specific case, everybody's different, right? There's no clear cut.
Mm-hmm.
You and I could have different tax situations, likely, right?
Yeah,
So
yeah.
it's very different for each individual, and that's why they need to talk to someone.
Sure. I mean, I think one of the benefits of a video like this is just making people aware at a high level, what
Yeah.
might be out there. And
Well,
then-
yeah, because actually, I was saying, there's a couple there that are probably starting to apply in my
Sure.
situation, and I'm dealing lots with seniors, and to know that there is something that you can access for multi-generational.
Multi-generational home, making homes,
accessibility.
homes safer, more accessible.
Yeah,
And even we also talked about getting in the game, saving up.
yeah,
What tax credits are out there, because increasingly it is difficult to come up with that down payment on your first home. So
yeah. Well, and like I say about my clients asking all the time about buying something together, and it's because it is getting onerous for a first-time buyer to get in, and oftentimes it's so expensive now for seniors to find accommodation. You could be talking $4,000, $7,000 a month for some, or even an apartment at $2,000 a month if you can somehow.
if you can make your own home more accessible, that could be an option.
Well, and I, as a seniors real estate specialist, but also as a senior and a citizen of this city, I truly believe that it's better if you can stay in your home. I mean, I like to sell their house, but as a taxpayer, it's much cheaper to keep somebody and help them in their home than it is to stick them in an institution somewhere. So any type of access to any type of savings or credits, that's great, because it's not cheap to renovate. I know, I've been doing lots of it lately, and the costs have escalated, and it's becoming really difficult.
If you can get the contractor.
Well, that's the other problem right now, right? It is, but no, that's great information, right? Because people ask me all the time, and it's hard for me to keep up to date with it, because they do change the budgets, come out with some new program.
Every year, and you also have a provincial,
Right.
the province of Ontario also has their own different programs. I'm only talking about federal programs.
Yeah.
I mean, there could be provincial programs, like Ontario has a home accessibility tax credit as well. So there could be both federal and provincial tax credits you have to consider. So
Yeah. Well, definitely, I'll put your contact information on this video, and they can reach out to you to
Sounds
get,
good.
to get how it applies to their particular situation, because, like I say, everybody's different. Everybody's got different income or criteria that's important to them. So
yeah, I mean the home accessibility can be claimed by other persons as well, possibly.
Yeah.
As you can imagine, the rules are complicated, but could be a situation where a parent looking after an adult child, or a child looking after a parent. I mean, there are other situations where certain caregivers can claim the credit as well, not just the person who is 65 or older or qualifies for the disability credit.
Yeah, no, that's
So-
good to know.
Yeah.
Well, thank you so much. It's always informative, and the thunder has stopped. I think it was because we were talking about taxes.
Yeah. Well,
The sun
thanks.
is coming back out again.
Thanks for having me. I always enjoy doing this and talking
Yeah.
tax and whatnot. So
Well,
it's
we'll
my
do
second
it-
time.
Yeah, we'll do it again when there's some new changes, because there always is. And
Budget 2023.
it's like a yearly thing. We
Yeah.
could set the date now, do you think?
We probably do it twice a year. There's also a provincial budget. So
Yeah, well, maybe we should talk about that. Yeah, the next one we'll talk about provincial, because, yeah, I want to know about those programs too, so I can give that information to some, especially some of my senior clients that, you know, they do still want to stay in their house.
Yep.
But how do they do that, right? How do they
make it safe and
And,
accessible?
Yeah, safety is very important, because falls are not good. It can be you end up in the hospital and maybe
Right.
never come home again. You end up in,
I mean,
in
That's what it's there for.
Yeah.
Things like widening hallways,
Yeah.
building ramps, you know, those sort of things. Anything, new flooring that is, you know, safer. You know,
Yeah,
these sort of
exactly.
things
Yeah.
are what it's there for. So,
yeah. Well, that's great. Well, thanks again, Ryan.
well, thank you. Always a pleasure.
Okay.
Take care.
Bye.
Bye.